Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor. But this video is not financial advice. In this video, we are going to take a look at Macy's, who reported earnings today. And one of the reasons I'm interested in checking Macy's out is because they have been my backup play, my second favorite acquisition target for GameStop next to Target. And so I want to look at, generally speaking, the health of Macy's to see, is it still attractive? Is it even more attractive now than it was then as an acquisition target? As well as look for clues within the earnings call to say, does it seem more or less likely? So is it more or less desirable, and or is it more or less likely based on what we can glean from their financials and their earnings call? That's what we're going to get into in this video. Before I do, just want to say thanks to those who have subscribed. Thank you for the likes and the comments and all of the above engagement. Thank you also to those who have joined the channel as fans and friends. 100% of the earnings of this channel do go to DRS Booked GME shares, and I appreciate the support. So earnings had a nice reaction, right? Up basically 5% on the day, Macy's was. And for this video, it's going to be kind of laid back because instead of just blitzing through all the financials, I really actually want to listen to the call together, and we'll pause where needed to kind of fact check, etc. So without further ado, let's kick off the earnings call and see what we can learn about Macy's, the company, and Macy's, the stock, here together.
I'd like to turn the call over to Pamela Quintiliano, Vice President of Investor Relations. Pamela, you may now begin.
Thank you, operator. Good morning, everyone, and thanks for joining us. With me on the call today are Tony Spring, our Chairman and CEO, and Tom Edwards, our COO and CFO.
Tony.
Along with our fourth quarter 2025 press release, a Form 8-K has been filed with the Securities and Exchange Commission, and a presentation has been posted on the investor section of our website, MACY'Sinc.com, and is being displayed live during today's webcast. Unless otherwise noted, the comparisons we provide will be versus 2024. All references to our prior expectations, outlook, or guidance refer to information provided on our December 3rd earnings call. On today's call, we will refer to certain non-GAAP financial measures. Reconciliations of these measures can be found in our earnings presentation and SEC filings available at www.macysinc.com/investors.
Here you go.
All references to comp sales throughout today's prepared remarks represent comparable owned plus licensed plus marketplace.
Hey, so 42 slides total. Okay. Target's had like 180 slides on theirs, so, not quite as much time being wasted in PowerPoint for Macy's compared to Target.
Sales, or OLM, unless otherwise noted. Go forward, Macy's Inc.'s comparable sales and other go forward metrics include Macy's go forward locations in digital located on their website. Beginning with the first quarter of fiscal 2026, adjusted earnings metrics will reflect our new non-GAAP metrics. Please note that all
everyone, and thank you for joining us today.
Here's Tony.
2025 was a year of transformation. Solid execution of our Bold New Chapter strategy, supported by our strong balance sheet, drove enterprise-wide improvements. We're gaining measurable traction and delivering meaningfully positive results. As we look back on 2025, we achieved several major milestones. First, we returned to positive comparable sales for total Macy's Inc. and Macy's nameplate, marking an important inflection point. Second, we achieved
comparable sales. This is same store sales. Sales per store actually grew year over year, despite top line actually still coming slightly down year over year, which I can show you here in the 8K. Here we go. Year over year, top line for Q1 came slightly down, but they have been closing stores, so their sales per store has actually inverted to the positive. Sounds familiar, right? Sound like a company we've been tracking here on the channel.
Better than expected top line and bottom line results in every quarter, demonstrating strong and consistent execution. And third, we delivered adjusted diluted EPS well above our most recent guidance, Results were also above our initial guidance despite the unanticipated impact of tariffs and lower than expected asset sale gains. I'm thankful to our colleagues. Their leadership, talent, and commitment are the driving force behind our performance.
So
our teams have worked collaboratively with our partners to deliver the bold
the things that they sold from their stores, they were not worth as much as they thought they would be. Right, lower than expected asset sale gains. The assets they've sold have been properties that they own attached to stores and equipment. That's actually pretty interesting to note because they have right here's their impairment. $230 million impairment. I don't know how many stores they closed. We'll have to look at it, but that's interesting because their balance sheet, right? They have 4.7 billion in property and equipment. Part of the interesting investor case for Macy's is the fact that their market cap is literally lower than their book value, right? So if you sold off all their assets, paid off all their liabilities, you would end up net with $5 billion or 4.8, which is a little bit higher than the 4.7 it's currently selling at. So if the balance sheet is actually not worth as much as Macy's thought it would be, that is like something to think about when you're talking about a deep value investment play is, hey, this asset number might actually be a bit inflated compared to the true value.
Chapter. And together, we are making meaningful progress towards our long-term sustainable profitable growth. Now let me provide a brief overview of fourth quarter results before turning to our full year performance and fiscal 2026 expectations. In the fourth quarter, Macy's Inc. net sales, comparable sales, and core adjusted EBITDA all exceeded guidance. Results were driven by better than expected performance across key line items and positive go-forward comparable sales at each nameplate, led by Bloomingdale's impressive 9.9% growth. Adjusted diluted EPS of $1.67 was well above our guidance range of $1.35 to $1.55. During the fourth quarter, customers responded favorably to our merchandising, marketing, and promotional events, supported by an improved omni-channel shopping experience. Macy's Thanksgiving Day Parade drew a record 34 million plus viewers and had over 3 billion earned social media impressions, up about 30% to last year.
That's crazy.
We leveraged the power of the parade into our retail offerings. Holiday destination categories, including fragrances, jewelry, and handbags, outperformed. Other highlights included women's contemporary, denim, dresses, and children's. At Bloomingdale's, our Happy Together campaign generated roughly 15 billion unique impressions per month in earned media for November. Denim, dresses, and children's.
Denim, dresses, and children's.
Outperformed. Other highlights included women's contemporary, denim, dresses, and children's. At Bloomingdale's, our Happy Together campaign generated roughly 15 billion unique impressions per month in earned media for November and December. Our Burberry and Bloomingdale's partnership.
The marketing that Macy's gets from that parade is crazy. Something like 3.5 billion impressions, up 30% year over year. That's wild. And Bloomingdale's, one of their higher end stores that they own, grew 9.9% year over year. That's impressive.
Partnership generated buzz through its in-store pop-ups and exclusive products. While almost every category had positive comps in the quarter, standouts included fragrances, women's contemporary, designer apparel, and fine jewelry. Fourth quarter performance wrapped up a successful second year of our Bold New Chapter strategy. For fiscal 2025, we exceeded expectations on all key line items, including net sales, comparable sales, EBITDA, and core adjusted EBITDA. An adjusted diluted EPS of $2.32 was well above our most recent guidance of $2 to $2.20. Now let's review how our strategic pillars drove annual results, beginning with strengthening and reimagining Macy's. Macy's nameplate achieved 0.6% go-forward comparable sales growth, representing a 190 basis point improvement versus last year and a 690 basis point improvement on a two-year basis. Performance was led by the Reimagine 125 locations in digital. The Reimagine 125 comparable sales grew 1%.
Wow.
Stores that have received initiatives delivered positive comps in 7 of the past 8 quarters and serve as a strong proof point of our ability to return to growth. Performance reflects our customer-led focus, including clear and purposeful changes at Macy's. We've improved our assortment relevancy. We're investing in staffing and events, and we're leveraging local market strengths. These initiatives are having a halo effect on Macy's omnichannel business and contributing to positive digital comparable sales results. Speaking of digital, Macy's digital channel represents approximately 1/3 of our annual sales. It is benefiting from a modernized Macys.com, inspired by what we're doing in stores. Over the past year, we have shifted to a more editorialized approach that reinforces our fashion authority and facilitates shopping across categories that drives commerce. Across stores and digital, we are emphasizing products and experiences. Our inventory composition and in-stocks have improved. We have a better balance of newness and evergreen product and have further refined our assortments and brand matrix. In 2025, we introduced 60 new brands, including Abercrombie Kids, MFK, BCBG, and Good American. At the same time, we expanded distribution on top existing brand partners such as Avec La Fille, Sam Edelman, and Donna Karan, while we continue to edit less productive brands. Our omnichannel customer experience is supported by investments in our colleagues. We've rolled out enhanced education, a tiered approach to staffing and events, and dedicated frontline colleagues to specific merchandise areas. In addition, we're taking a more localized approach to provide store-level empowerment and deliver against direct customer preferences in each of the markets we serve. This year, we achieved our best Net Promoter Score on record. We're proud of the results and our deep customer engagement. We had approximately 900.
I wonder with that children's piece, how much of the boost in children's was related to Switch 2 stuff, right? Their Toys R Us partnership and, Lego, Barbie, Hot Wheels, like how much children's is coming from their kids' clothes and how much children's was, hey, we're in the beginning of a new console cycle, you know? It's kind of interesting to think about.
100,000 respondents participated.
Also, one thing I want to note is this Tony's tone is so like it's borderline monotone. It's almost hard to listen to. Very different from Target, which was so promotional, right? So Macy's is like Macy's is a few years into what they've been calling, what have they been calling it again? A bold new chapter. And the bold new chapter for Macy's has mostly been, hey, sell fewer higher end things in some ways, like close stores, sell underperforming stores, double down on the luxury brands, right? And just generally streamline costs. And for the stores that you keep, they've been calling it reimagine, right? Like, how do you basically they're just redoing the layout and making it look nice again, making it feel nice to be in there again. And then obviously driving more traffic to online, 33% of sales now coming from online. So, anyways, they're several years into this, and you're already seeing an impact on financials that's pretty impressive. And meanwhile, his tone is very like nonchalant. That's a great sign as far as the leadership of a company letting the numbers do the talking instead of with Target's call, for example, a lot of big talk, but then the numbers didn't really line up with the tone. The numbers were all pretty mid and beat expectations, but expectations were actually pretty bad, um so anyways, pretty I like what I hear so far.
In surveys throughout the year, and we remain committed to continuous improvement. As I reflect on 2025, Macy's has a clear, well-defined strategy that is gaining traction. When combined with our strong financial foundation, I am confident we can further build momentum. Now turning to our second pillar of strategy, accelerating and differentiating luxury. In 2025, Bloomingdale's achieved 7.4% comparable sales growth, representing a 490 basis point improvement versus last year and a 1,030 point improvement on a two-year basis. Strength was broad-based across stores and digital, with growth in almost all product categories. Our Bloomingdale's strategy is anchored on being the local leader in the markets we serve. We have a clear emphasis on discovery, newness, and connection with the premium, contemporary to luxury customer. Over the past year, we have raised the bar on curation. At the same time, we've deepened brand partnerships and further invested in experiences. This approach is resonating. We continue to gain market share across brands, categories, and regions. Our unique multi-generational audience is drawn to our inviting and vibrant shopping environment and compelling assortments. During the year, we introduced new brands, including Totem, Christian Louboutin, Victoria Beckham Beauty, Skims, Messica, and Viore, just to name a few. These brands have inspired existing customers, attracted new ones, and further strengthened Bloomingdale's relevancy. It's an exciting time at Bloomingdale's. Our team is strong and has never felt better. We have a highly loyal and engaged customer base and excellent vendor partnerships. We also have an omni-channel roadmap for growth. Recent performance demonstrates how a disciplined focus, clear brand strategy, and consistent execution can drive results. We are well positioned to build on this foundation and deliver sustained performance. Rounding out the conversation on luxury, Bluemercury achieved 1.6% annual comparable sales growth.
They say it's differentiated, Bloomingdale's, which I'm sure it is, from just what's in there for sale. But the storefront looks so similar. Like it just looks like a Macy's. But I guess Bloomingdale's, just the average thing is going to cost more. And so if you want designer stuff, there you go. And that's the differentiation, not so much the layout and the way the store feels. Anyways.
Results continue to be driven by dermatological skincare and fragrances, including SkinCeuticals, Dr. Diamond's Medicine, Cecilia Paris, and Parfum de Marly. We are also encouraged by the performance in our new stores, which continue to post growth as we iterate on assortments and develop each store's client base. The third pillar of our strategy is simplifying and modernizing end-to-end operations to improve customer service and drive greater efficiencies. Initiatives are delivering results. As our business continues to evolve, we are expanding the aperture of end-to-end to encompass a broader view of organizational excellence and operational efficiency. This continues to incorporate the use of AI, where we are building capabilities throughout the organization. The team has walked me through
Bluemercury is like a high-end Ulta, I guess.
over 35 different use cases, all of which are designed to support how customers shop and how our colleagues serve them. And I'm excited about what's to come. Looking to fiscal 2026, we are focused on the factors in our control. We continue to execute our Bold New Chapter strategy. We'll build on what's been working, including our go-forward fleet, product, and brand relevancy, and our improved omni-channel experiences and messaging. This will be supported by our strong culture and seasoned leadership team. At Macy's, we're confident in the reimagined location's ability to deliver profitable growth. Earlier this year, we introduced initiatives to an additional 75 locations, creating the Reimagined 200. Now, nearly 60% of our go-forward Macy's store base has the full suite of initiatives, accounting for roughly 75% of our go-forward Macy's store sales, delivering meaningful scale to our overall business.
So this is interesting. By the end of the year, they're saying 60% of our stores will already be done being retrofitted, whereas Target was like, hey, every year we're just going to do 5% of our stores to 10% of our stores, and every 10 to 20 years, every store is going to have to get redone. Like there wasn't a reinvention of the plan so much as just facelifting the existing floor prints. So interesting that Macy's is like, hey, with a quarter of the locations as Target, we can actually knock out all of our stores over this 5-year window, and then the upkeep from there is actually much more manageable. Like they can make such a bigger dent in their storefronts because they have fewer stores to work with.
2026 is a year of milestones. We have the 50th anniversary of our 4th of July fireworks and the 100th anniversary of the Macy's Thanksgiving Day Parade. And we will be
Wow.
top of mind during these key moments,
That's
as
gonna be
well as
huge.
many others. We are calling 2026 Celebration Start at Macy's. In addition to the large-scale event that the whole country celebrates with us, we also have localized strategies designed to engage customers, generate excitement, increase brand loyalty, and enhance the shopping experience. We had our first celebration. Prom starts here last Saturday. Customers at Herald Square and our stores across the country were able to meet their favorite content creators, explore curated prom edits, attend beauty master classes, and personalize their looks. These activations drove social engagement and our overall sales. Prom is just one of the many events that Macy's will host for the entire family this year. And Macy's is not celebrating alone. Last week, Bloomingdale's launched its spring fashion campaign.
This is so genius. So their next so like with GameStop, they're trying to get in more and more into collectibles as the logical next area that they can compete. Macy's is moving into celebrations. And they're starting with celebrations that are heavily clothes oriented, which makes so much sense. But for Macy's to begin taking away from the market share that a general store like a Walmart or Target might get, or celebration specific stores like a Party City or some of those bankrupted stores like or Hobby Lobby, like for Macy's to kind of move in is so genius because of their huge investment into parades, right? They already kind of have that mental cultural association and they don't sell a whole lot related to it. And so I think that's a great strategic next
California
move.
Love, featuring unique experiences, exclusive products, and community-driven moments. At its heart is Surf Shop, a new carousel spotlighting California-owned and inspired product. The carousel introduces 16 new California brands, 270 limited-time exclusives, from customer favorites including Vince, Citizens Humanity, A. Goldie, Staud, Simkai, Frame, and Mother. And it also has an Aqua and Lisa Says Ga collaboration. Bloomingdale's has strong momentum with multiple levers for continued growth. We're a partner of choice, allowing us to introduce more new relevant and exclusive brands while expanding our points of distribution with existing brands. Our immersive shopping environment, which invite customers to spend the day with us, are differentiated and resonate across geographies. With stores in just 14 of the top 50 designated U.S. markets, there is significant room for expansion of small format Bloomies and outlets, and we are methodically evaluating all opportunities. I am confident in our ability to further expand our position as a leading modern luxury shopping destination. Now I would like to discuss the consumer and our approach to 2026 guidance. Thus far, our customers have remained resilient, and we are pleased with our quarter-to-date results. Our customers across nameplates skew more towards the middle and upper income tiers. Performance remains stronger in these cohorts, while the lower tiers remain more choiceful. As we look ahead, there are many macroeconomic and geopolitical factors that could influence discretionary spend. While we remain confident in our strategy and believe we are well positioned to build on our recent momentum, we are taking a prudent approach to guidance. Our first quarter and fiscal 2026 guidance ranges support our go-forward growth initiatives while preserving flexibility to respond to changes in the competitive landscape and consumer demand.
Great.
To close, our commitment to the Bold New Chapter is unwavering. It is delivering results. We have achieved 4 consecutive quarters of better than expected top line and bottom line performance and 3 consecutive quarters of comparable sales growth led by our go-forward Macy's and Bloomingdale's business. In 2026, we are well positioned to deliver further progress.
For both the quarter and the full year, we achieved better than expected net sales, comparable sales, go-forward comparable sales, adjusted EBITDA, and adjusted diluted EPS. Let's begin with a detailed view of the fourth quarter. Macy's Inc. net sales of $7.6 billion were above our guidance range of $7.35 to $7.5 billion and compared to $7.8 billion last year. Excluding the approximately $200 million impact from the 64 non-go-forward stores that closed at the end of fiscal 24, Macy's Inc. sales grew 0.9%. Macy's Inc. comparable sales rose 1.8%, materially above our guidance for down 2.5% to flat, led by go-forward business comparable sales growth of 2% compared to guidance of down 2% to flat. By nameplate, Macy's go-forward comparable sales rose 0.6%, including Reimagine 125 growth of 0.9%. Both the first 50 and next 75 locations were positive. Bloomingdale's comparable sales rose 9.9%, benefiting from its best holiday result on record, and Bluemercury comparable sales increased 1.3%. Turning to revenue,
Right.
Macy's Inc. total revenue was $7.9 billion, down 1.1% to last year. Similar to net sales, the decline was entirely attributable to.
So you're seeing that it's not just Bloomingdale's carrying everything, but Bluemercury and Macy's also comparable sales improved year over year. And basically, all three brands are focusing on selling to customers that are upper middle class and upper class so that they are generally less affected by uh, the macro economy as far as their discretionary spending decisions.
Last year's store closures. Revenues included $277 million other revenue comprised of credit card and Macy's Media Network. Credit card revenue was $205 million, up 17.1% versus the prior year, driven by our healthy credit portfolio. And Macy's Media Network revenue was $72 million, up 12.5%. Gross margin was $2.7 billion, or 35.2% of net sales compared to 35.7% last year. Excluding an approximately 60 basis point tariff impact, which was in line with our expectations, gross margin rate would have expanded about 10 basis points. For the quarter, AUR continued to rise, driven by a favorable mix shift and positive consumer response to newness. SG&A expense of $2.4 billion declined $23 million, or 1% from last year. The decline reflected the net benefit of the 64 closed Macy's locations and ongoing expense savings initiatives. It was partially offset by investments in our go-forward business, which we view as critical to driving healthy and sustainable top-line growth. As a percent of total revenue, SG&A expense was 29.8% compared to 29.7% in the prior year. During the quarter, we recognized $3 million of asset sale gains. This compared to our expectation for $15 to $20 million and $41 million last year, and reflects the shift in timing of certain transactions. We remain committed to optimizing our go-forward fleet and being disciplined in our approach to closing underproductive stores. With that, looking at.
So Macy's SG&A expense ratio is actually a decent bit higher than GameStop's, and their margins are actually about the same, a little bit higher than GameStop's, but they're selling clothes, which you would think they'd be able to sell at a meaningfully higher margin than GameStop, who their total margins come down because of new consoles, which everyone knows they basically don't have an ability to sell at a high margin. So, anyways, GameStop's margins are relative to Macy's quite impressive given the industry GameStop's competing in. And SG&A as a percentage of sales, much more efficient, a much leaner operation at GameStop compared to Macy's.
Fourth quarter earnings, adjusted EBITDA was $840 million, or 10.6% of total revenue. This compares to $903 million, or 11.3% last year. Adjusted EPS of $1.67 exceeded the high end of our guidance range of $1.35 to $1.55, including a tariff impact of approximately 13 cents and a roughly 4-cent impact from lower than expected asset sale gains. Performance was supported by our disciplined approach to cash flow, balance sheet, and capital allocation. Let's start with cash flow. Macy's Inc. generates robust operating cash flow on an ongoing basis. This supports our capital allocation priorities. For the year, operating cash flow was $1.4 billion versus $1.3 billion last year, and free cash flow was $797 million versus $679 million last year. This represents a free cash flow yield of over 15%. We achieved higher free
Nice
cash flow
cash flow for
despite
sure.
monetization proceeds of $107 million compared to $283 million last year, and ended the year with $1.2 billion of cash on our balance sheet. During the year, our balance sheet was further strengthened via a series of financing transactions. We now have no material long-term debt maturities until 2030. Our adjusted debt to adjusted EBITDA leverage ratio remains below our 2.5 times target, which reinforces our financial flexibility. At year-end, inventories were $4.4 billion, down 1.3% from last year. Heading into spring, we feel good about our composition. We have more newness, less aged goods, and open-to-buy flexibility to respond to market dynamics and trends. Turning to capital expenditures, we're focused on supporting growth and efficiencies and improving our customer experience. We evaluate all initiatives based on return on investment. For 2025, capital expenditures were $740 million, down from $882 million in 2024. The reduction in year-over-year spend primarily reflected the completion of several longer-term projects, including our China Grove Distribution Center, which opened last year. Looking ahead, we continue to believe there are compelling investment opportunities to support and accelerate our long-term growth profile. Our capital allocation priorities are clear and consistent. First, invest in the business to support the Bold New Chapter strategy.
Yeah.
Second, manage our balance sheet. 2025, we repurchased $251 million of shares, including $50 million in the fourth quarter. This leaves approximately $1.1 billion remaining on our authorization. As we reflect on 2025, we made significant progress towards achieving our long-term goal of sustainable, profitable growth. Before turning to guidance, I want to share a few observations from my first 9 months. Starting with the team, I have been impressed by our talented colleagues. Their dedication, skill, and expertise, combined with the willingness and urgency to drive the business forward, is delivering results. Beyond our teams, I believe Macy's, Inc. has significant underappreciated capabilities in areas such as data science, AI, and technology. And our Macy's ecosystem is a fundamental strength, which I'll describe in more detail shortly.
Okay, we'll see what he says, but for data science, AI, and technology to be at the forefront of Macy's mind as far as like their growth as a company, I sure hope he just means like streamlining their SG&A, right? Like we can replace some white collar jobs through AI and become more efficient. I sure hope he's not saying like we need to turn Macy's into an AI company. Like I feel like everyone just needs to say AI to get investor support for their company, and I just sure hope Macy's is not following down that groupthink of like we're actually an AI company. It's like just sell clothes. Jeez.
With these observations as a backdrop, my focus and approach is clear. Support the execution of what is already working. Adjust direction and adapt where needed, and build on our strengths and opportunities to accelerate growth. There are 3 specific areas that highlight these learnings and approach that are incorporated into our plans for 2026 and beyond. The first area is our Macy's store portfolio. One of my top priorities has been to carefully evaluate the Macy's base, including current performance, future potential, and real estate value considerations. We are taking a pragmatic approach and are committed to running an optimized fleet that can profitably grow. Based on our assessment, our target go-forward fleet remains approximately 350 locations. These will form a cohesive market-by-market framework that supports our broader Macy's omni-channel business. We still plan to exit approximately 65 locations, completing the previously announced 150 closures. With our strong balance sheet and cash flow generation, we can be flexible on timing of transactions. In order to maximize value of remaining assets, we now expect closures through 2028. The second area is related to organizational excellence and operational efficiencies of our end-to-end operations.
So they want 350 Macy's stores and they've got 430 currently. I'm pretty sure he's talking about just Macy's specifically there. And yeah, Bloomingdale's does have a ton of room to grow. They have less than 75 stores. So they do seem to be onto something there.
Our end-to-end initiatives are working. We have materially improved delivery times and now share specific delivery expectations with our customers. Following our multi-year network modernization efforts, our new state-of-the-art China Grove distribution facility has streamlined and automated how we work and will provide better customer service and reduce cost to serve.
Interesting though that
Building on this as a base,
their
we
forward
believe there's
guidance is
significant
basically flat
opportunity to
for
leverage AI
same-store
throughout the
sales.
organization, including supply chain, merchandising, marketing, and call centers.
So even though they grew same-store sales this past year, they're not projecting to do that again. So it might basically they think that it might have gotten a little bit lucky. Or in other words, maybe the Switch 2 did carry things a little bit for their Q4 of this past year. And or they think tariffs are going to weigh that much. Like there's just too much inflation risk and it's going to hurt the average household too much. And as a result, they're going to stay flat year over year as a result of that. They did say that they are being extra conservative with their guidance. Like they think they're sandbagging a little bit, like leaving the ability for them to beat expectations again, um, and just being overly cautious. Um, but still, to say we've returned to same store growth, also, we don't know if we've actually returned to same store growth, is a little bit like, it's a chink in the armor for sure.
As well as in customer-facing and omni-channel areas. Now let's discuss the Macy's ecosystem. I've been impressed with our deep customer knowledge. We connect with nearly 40 million customers annually, giving us visibility to over 70% of transactions.
Especially
This
when
is
they know
enabled by our
Q1 is
stores, digital
outperforming.
channels, loyalty, and credit card programs,
They know
in
Q1
addition
is
to Macy's Media Network,
up
marketing, and
1%
events.
year over year,
They are all interconnected and
and they
provide
still
value
think
to
the
our
total
customers
company
and
might
to
be
Macy's
down
Inc. Having
0.5%
spent many
year over
years across
year
the
from a
retail,
full year
consumer goods,
perspective.
and hospitality
That means they
industries,
think the
this
economy really
ecosystem
might
is a
hit the fan,
unique strength.
which is spicy.
Now, before turning to guidance, as a reminder, on February 18th, we filed an 8K updating our non-GAAP metrics and definition of non-GAAP earnings, which now for the full year 25, and interest expense of roughly $110 million. And we expect adjusted diluted EPS of $1.90 to $2.10. This does not include potential future share buybacks. It does incorporate a roughly 10 to 20 cent tariff impact and compares to adjusted diluted EPS of $2.15 in the year-ago period.
The diluted.
For the first quarter, we
So they
expect
do
net sales.
think, even though they think same-store sales might be flat for the full year, they do think that adjusted diluted EPS will still rise to about $2, which would be a nice improvement year over year. It means they think that they are getting more and more efficient. Their top line is more profitable as they are divesting from some of the less profitable stores, and they think that's going to be a flywheel that continues into this coming year as well, even if the top line number doesn't grow at all. So their cost cutting um, is moving the needle for them for sure.
Sales of approximately $4.575 to $4.625 billion. Macy's Inc. comparable to negatively impact EPS by roughly 5 to 10 cents and gross margin rate by roughly 40 to 60 basis points.
Break even during Q1.
In conclusion, we ended 2025 on a strong note.
It's pretty normal.
Better than expected fourth quarter results across key metrics underscore the strength and promise of our Bold New Chapter strategy. We have proven initiatives in place supported by our solid free cash flow, balance sheet, and capital allocation strategy. As we look to 2026, we are well positioned to thoughtfully navigate the near term, deliver our long-term goals, and provide meaningful value to our customers and shareholders. Now, I will turn the call back to Tony for closing remarks.
Come on, Tony.
Thanks, Tom. The Bold New Chapter strategy is centered on creating a more focused, resilient company. It balances the art and science of retail. We combine customer insight, data, and creative merchandising to meet customers where they are. Recent performance reflects accelerating momentum across each pillar of our strategy, and reinforces our confidence in the direction. We have a clear path to growth. Our balance sheet, relationships, and initiatives position us to build on recent financial and operational success and pursue new opportunities. And with that, operator, we're now ready for questions.
Okay.
Thank you. We will now be conducting a question and answer session. If you would like to ask a question, please press star 1 on your telephone keypad. A confirmation tone will indicate your line is in the question queue. You may press star 2 if you would like to remove your question from the queue. For participants using speaker equipment, it may be necessary to pick up your handset before pressing the star keys. We do ask that you please limit yourself to one question and one follow-up question. Again, that's star 1 to register a question at this time. Our first question today is coming from Blake Anderson of Jefferies. Please go ahead.
Holy smokes.
Hi, guys. Good morning, and congrats on the nice quarter here. Wanted to ask Tony to start, given the continued macro and consumer volatility, just how are you feeling about the ability for Macy's, Inc. to be more resilient going forward despite the headwinds to the...
Look at these interest rates on Macy's debt. And is this in millions? Right, 500 million. They've got $1 billion in debt, 1.5 billion in debt. Right? 425 plus 500 plus 566 at a average of 6.2% interest. Another 200 million at 6%. Another 200 million at 6.4%. Another 500 million at 4.9% or whatever. Like, their Macy's, if Macy's could get their hands on some cash, right, it would help them out so much. They have in total, I mean, what is that in total? Another 2.5 billion in debt at like 6% interest. GameStop has 4.5 billion in debt at 0% interest. I mean, that's just pretty incredible when you think about the difference in the financial state of the two companies.
Consumer, and what gives you confidence you can continue to build on the momentum you made this past year?
Thanks, Blake, for the question. I feel terrific about how we closed the 2025. Growth across Macy's, Bloomingdale's, and Bluemercury. Reimagined stores continuing to outperform, 7-8 quarters of growth. Bloomingdale's running on all cylinders, growth in digital, growth in physical, growth in full price, and growth in off price. And we end the year with a healthy balance sheet and inventories below the prior year. There is a lot of uncertainty. And so our guidance reflects this tension between how good we feel about our strategy, how good we feel about our team, and the level of uncertainty relative to macro and geopolitical environment. So I feel good about the things that we control. The team is clear-eyed and focused on delivering for the customer, making sure that we build on the Net Promoter Scores, that we are at record levels, and the level of traction that we're getting across all three nameplates.
And Blake, I just add here that we have a business model that puts us at an advantage in this situation. We're multi-brand, multi-category, multi-channel, serve off-price to luxury, so we can react and adjust depending on circumstances to serve the consumer and meet their needs.
Great, thank you. And Tom, if you could add on AUR versus units, just curious how you think about that for the guide this year.
Sure, happy to. So we've been very pleased with AUR continuing to grow, and we saw that continue in Q4 as well as in Q3 and before that. And it's really a reflection of our strategy to improve our assortment, to bring in better brands, to reimagine our stores, to modernize our digital channels. So we're feeling good that that trend will continue, and that's included in our expectations going forward. Overall, basket is also increasing. So while units may be down slightly, we're seeing an overall basket in our consumer buying more on a dollar basis. We see traffic steady and more predictable, and on the conversion side, maybe a slightly more choiceful consumer. But feel good about going forward from an AUR perspective.
Great. Thanks so much.
Thanks, Blake.
Thank you. Our next question is coming from Matthew Boss of JP Morgan. Please go ahead.
Great, thanks. So, Tony, on performance across nameplates, could you elaborate on the inflection at Bloomingdale's the last 2 quarters? How much of this you believe is execution relative to luxury consolidation? And then what is the range of outcomes for Macy's go-forward banner comps next year within the flat consolidated guide? And then, Tom, on the cadence, maybe could you just touch on top-line guidance for the first quarter relative to the 100 basis points or so of moderation that's baked into the full year? How much of this is near-term trends that you're seeing in the business today versus macro uncertainty that maybe you've prudently baked into the full-year guide?
Thanks, Matt. Look, we feel terrific about the Bloomingdale's business.
That guy just asked, like, hey, if you're going to be doing well in Q1, right? If Q1's up, why are you guiding flat for the full year? Is that related to your business, or is that just literally the impact that you think tariffs is going to have on the business?
It's every indication that the growth continues because it's so broad-based. It's in the apparel business, it's in the home business, it's in the accessories business, it's in our flagship stores, it's in our smaller stores, it's off-price and Bloomies. The vendor community has rallied around Bloomingdale's like never before. They are delivering for their customers at an exceptional level right now. So we are continuing to fund from both a capital and from a SG&A standpoint the growth potential of Bloomingdale's. It's important to the overall architecture of Macy's Inc.'s go-forward business. So I feel strong about the opportunity for Bloomingdale's. The disruption in the marketplace only gives more fuel to the fire. Relative to Macy's, I'm pleased that we're to 200 stores now in the Reimagine program. That's 60% of our go-forward Macy's fleet and 75% of the Macy's store go-forward sales. You've moved from test to iterate to now we're at the scale point. And I think the Reimagine program has the opportunity to continue to deliver comp growth for the Macy's brand. As we mentioned on the call, our digital business at Macy's is healthy, a third of our business and growing, with a nice balance between 1P and 3P. So the external environment is where we have concern. The performance of our business relative to the fourth quarter, the first quarter so far, and the broad-based growth across all 3 nameplates gives us confidence in what we control.
And Matt, I'll continue with the quarter Q1 trends and into the rest of the year. So we are encouraged by Q4 performance. Our consumer skews more to the higher income, and we're seeing them be more resilient. So we're seeing this trends continue into Q1 and pleased with that. However, we're cognizant of that broader external environment and want to take a prudent and measured approach to guidance. We also have 60% of the quarter from a volume basis left to go. When we look at the rest of the year, we're looking at our comps on a multi-year stack, and on that basis, they're more evenly paced through the year. So we're really thoughtfully considering that as we guide it for the full year on a comp basis. But we're very confident of our strategies and continue to build on the Bold New Chapter momentum as we move through the year.
Great color. Best of luck.
Thanks, Matt.
So they basically said they think all of it is tariffs. The stores are doing great. No need to worry about that. The Macy's Reimagined, it's basically a new updated footprint, right? And then they added like a couple sales reps in their stores instead of just people that are checking you out, like at the cash register and cleaning the bathrooms. They have people there that are like concierge, like shopper assistants. And wouldn't you know it, if you have people selling your customers in the store, and that's their job, is to help people buy stuff, that people buy more stuff, right? Reimagine. Sorry. This is interesting to me that they only sold $100 million worth of assets, and yet they recognized, what was it? 200 million in impairment. So I think we'll have to wait till the 10K comes out to see what all that impairment is from. Some of that's restructuring and other costs, but they might have some of their, and granted, the assets they're selling are their worst performing stores, so they are the least valuable of these stores that they hold on the balance sheet. But man, you better hope that the properties that Macy's recognizes on this balance sheet are not over inflated by double, right? Say, oh, we have 5 billion in property, but by the way, we're only going to be able to get a third of that out in cash if we sell it. And this is selling it while you're still operating as a business. This isn't like it's being sold in bankruptcy court. This isn't like you're selling it for pennies on the dollar because you have to. This is, hey, we're choosing to sell this asset and oh shoot, we're only going to get 100 million and we thought it was worth 300 million. Hopefully its other costs are a huge portion of that impairment charge, but um, their balance sheet might not be quite as strong as they indicate. And this long-term debt here, this 2.5 billion in debt, is weighs a decent amount, right? This is $100 million of interest expense. That's for the full year, right? Yeah. So coming down, like they took 33 million to slap at it. So it's they're free cash flow positive. It's not like concerning, but when your net income is 650 million and hey, 100 million of that is interest expense that could bring you to 750, that it's meaningful.
Thank you. Our next question is coming from Brooke Roach of Goldman Sachs. Please go ahead.
Good morning, and thank you for taking our question. Tony, with some competitors leaning into value in a bigger way this year, what actions are you taking to appeal to a more price-sensitive consumer amidst an inflationary macro backdrop in 26? What are your plans for promotion and marketing on this? Thanks.
So Tony's this whole time he's been like, look, here's our inflation plan is we're just going to sell to rich people who don't care, right? Because they're not as affected. And this person's like, hey, but a lot of other people are trying to compete on price. Don't you think you should try to compete on price? What are you going to do to get the truly middle class or lower middle class customer to shop at Macy's?
Thanks, Brooke, for the question. We have value as a part of our overall architecture as being a promotional department store at Macy's. You remember we have backstage, we have regular promotional events, we have a private brand portfolio that offers meaningful value in the different categories that we play. So to me, it's always a balance. We want to offer promotion to make sure that we are continuing to capture the customer that is looking for deals or for value. And at the same time, we don't undershoot the customer who's looking for the better brands and the range of price points that we can offer across our entire portfolio.
The CEO is like, look, we have the backstage thing. Yeah, you have 4 backstage locations, and the one clearance furniture place you now have 0. So he's like, look, we do a little bit of discounted merch, but we don't want to sell our customers short. Some of our customers really like paying full price. That's his way of saying, did you not listen to anything I just said in this conference call? We are selling to the high-end customer. We're not going to compete on price. We're not going to discount stuff and try to win on value.
In both 1P and 3P, and from off-price to full price, and certainly from Macy's to Bloomingdale's. So I like how we're positioned. We're really being requiring of ourselves and the market to make sure that we get the balance right, call it a barbell approach, but from good, better, best, we're looking at it from every brand type and every price point to make sure that we're executing and doing everything we can to capture all different levels of consumers.
Great. And then just a follow-up for Tom. Can you detail the puts and takes to gross margin this year beyond tariffs? What are the core operational drivers of the improvement that you're forecasting, and how should we be thinking about the cadencing and magnitude of that improvement as you move into the back half?
Sure. Thanks for the question, Brooke. The core underlying performance, and if I look at the full year guide, we're guiding down flat to 20 basis points, and tariffs are 20 to 30 basis points. So the underlying trend is positive. We expect gross margin to be strong and improve and expand as we move through the year. We would see that as well in Q1, except there's a slightly higher tariff impact of 40 to 60 basis points in the quarter. The items that are driving our gross margin performance, which is exactly what we saw in Q3 and Q4, are really the fundamental Bold New Chapter initiatives of improving and creating a more relevant assortment, bringing in better brands, having better experiences across our omni-channel platform, both in stores and in digital, and that is supporting AUR and gross margin as we move forward. So we do expect that trend to continue through the year. We haven't guided to specifics on a quarterly basis, but we would expect that fundamental trend to be positive, reflecting our strategy.
Great. Thanks so much. I'll pass it on.
Thanks, Brooke.
Thank you. Our next question is coming from Dana Telsey of Telsey Advisory Group. Please go ahead.
Hi, good morning, everyone, and nice to see the progress. Bloomingdale's 59th Street, that fourth floor looks terrific with the brand expansion. On the Macy's additional 75 stores being added to the reimagined bucket, how are you thinking about the progression there versus the original stores that you added to the bucket? Do you expect the same type of results? Is there different timing, different things you'd add up or down? And then just on the number of store closures this year, how many will there be in 2026? And are you thinking of any number of store openings even for the smaller Bloomies? Thank you.
Thanks, Dana, for the question. The Reimagine program we're very proud of and pleased with the contribution. We've had 7 of 8 quarters of growth in the Reimagine and growth from the first 50 on forward. So as we added the next 75, we began that in February. Those tactics roll out over the course of the first few weeks of the spring season. That's additional colleagues in the store, that's additional brands within the assortment, that's better execution in the store, better storytelling, localized events. As a part of that program, we certainly have iterated before we got to scale. So I would tell you that as opposed to directing top-down centrally every aspect of the program, we are empowering locally more so in the next tranche of stores and even going back to the original stores, allowing our local leaders to determine where those colleagues can be best utilized. We're also trying to make sure that we're customizing local events so they resonate more meaningfully with the consumer base. And we're obviously amping up our work in visual and storytelling because we can see what a difference it makes in selling regular price and in selling the new brands that we're adding to our assortment. I'll let Tom cover the store closures.
Thanks for the question on the store closures, Dana. So as we look at the non-go-forward stores, our goal is to have an optimized fleet on a market-by-market basis that supports our broader Macy's omni-channel business, and we've rigorously evaluated the future and current performance of our stores and the real estate value. As a result, we're extending the closure timing of the remaining approximately 65 stores through 2028. While we don't provide in advance closure guidance, I would look to that 3-year time frame for the remaining approximate store closures. And that'll allow us to wait for the most favorable real estate market in order to get the most value for our shareholders and for our business. And the way we can do that is we can be patient because of our strong balance sheet and cash flow and still invest in the business to drive our overall growth. As a result of this, we're expanding and increasing our cash expectations from this initiative from a previous $500 to $650 million to a total of $650 to $700 million. And that leaves us, after we've monetized approximately $400 million, $250 to $300 to go, which is worth about $1 a share. We look forward to running an optimized fleet that will support our broader business going forward.
Thank you.
Thanks, Dana.
Thank you. The next question is coming from Oliver Chen of TD Cowen. Please go ahead.
Hi, Tony and Tom. Which categories drove upside this quarter? And also, as you think about private brands, where are you there? More simply, what are your thoughts on what it'll take to positive comp above 2 to 3% more consistently? And then finally, in the realm of AI, what's live today, relative to the use cases and the KPIs you're thinking of? I know AI is applying to supply chain as well.
I wish they broke out Bloomingdale's and Blue Mercury, but they don't in their sales. They put it all in sales. But as a total holding company, they do basically of this 22, like essentially like 12 is women's, 4 is uh well, sorry, 13 or 14 is women's, 4 or so or 5 is men's plus children's put together, and the other 3 or 4 or so is like home goods. So anyways, they're definitely very women heavy.
Well as customer experience.
But if Bloomingdale's being the, hey, this is the big thing and we only have a few of them and we have tons of room for expansion, it's like, yeah, but are we talking about 2% of your business right now or 5% of your business? Like how much of the sales is Bloomingdale's? How much of the cost is Bloomingdale's? How much of the profit is Bloomingdale's? They don't break it out. It's lame.
As well as marketplace.
Let's
But
fly through the
are
rest
there
of this
thoughts
earnings
in
call,
terms
and
of
I'll give
how
some thoughts
you're
to wrap us up.
evaluating?
Is obviously a strength for both brands. Private brands is still an area of development, so we're still at the right track. I would just close with AI for us is an opportunity to combine the improvements in technology and data science with humanity and deliver a relationship-oriented business that is focused on the consumer.
Okay, so they're just using AI to improve their customer retention and satisfaction. That's great.
Our initiatives are focused on growing the business.
Better brands and having a more relevant assortment. That is working, and I think we have a long runway there to continue to expand. The other is to look at our overall owned licensed marketplace, and we've been in our new 8K sharing our OLM sales and focus more on OLM comp because we can and are managing the business across all different areas. That's how the consumer shops us. They don't know exactly where it may be coming from or who owns the inventory, but we can create the best experience and provide more relevant assortment across all of our different means of delivering to the customer. The last thing I talk about, which I mentioned in the script, is this Macy's ecosystem. I think there's huge value here.
So
and
some
I
of their
and see the 40 million customers we know that are in our loyalty programs. We know not just what they're buying on a given day, but what their history is and what their...
Right, like they have this marketplace, on their website where it's like, oh, do you want these pants? But then some of these are like sponsored, and some of the fulfillment of these, like Macy's is the marketplace, but they're not necessarily the seller for every single thing on their site, which is the same thing that, Amazon and Walmart and other retailers do. So, good to know.
Their preferences are, and that's where looking in store as we build.
What do you want to say, Tony?
Best regards.
Thanks, Oliver.
Thank you. Our next question is coming from Paul Lejuez of Citi. Please go ahead.
Hey, thanks, guys. Curious what it costs from a CapEx and SG&A investment to bring a store into the reimagined program, and also what kind of sales and EBIT dollar lift do you expect in year one and year two? And then, apologies if I missed it, but can you talk about CapEx plans for F26, just how that
expectations over the years and
revenues, and maybe anything you could share about the underlying health of the credit card portfolio? Thanks.
Sure, I'd be happy to. So our guide for other revenue is approximately 920 ad.
By the way, 3%, like whatever they make in sales, they have another 3% of that they get in credit card earnings. And then another almost 1% of that they get from selling ads on their website and in their stores. So it's a nice little 4% boost, right? 3.9% boost to sales. through, you know, just a couple other little mechanisms. It's kind of nice.
Initiative that we announced earlier. And I'd also just like to add with a note that we call it other revenue, but it's really an integral part of the business. We want to and be very careful as we're looking at go forward versus non-go forward to make sure we maintain a market presence on a store basis as well.
Expand it to more stores and start to push the initiatives out sequentially through the year. Does Reimagine start to break away and push the comps higher? We see that spread widen?
Thanks for the question, Michael. I'll take the first part in the Q1 flow through to EBIT. So we are seeing a gross margin impacted by tariffs, 40 to 60 basis points, and expect gross margin on the whole to be down in the quarter, but importantly up through the remainder of the year. The other change is in SG&A. We are expecting some additional investments in SG&A through the year, including in Q1, and those are really to support and drive growth. Our investments have driven growth in the past, and we're looking forward to continue to invest, including in the Reimagine 200, to continue that pace. So that's really the key difference.
And relative to the Reimagine stores, Mike, you have a convergence that I think begins to happen by the time you get to the latter part of the year and certainly going into next year, where the majority of our fleet is in the Reimagine program. And while they continue to outperform the remainder of the go-forward fleet, the differential is smaller. But we expect comp growth in our Reimagine stores, and that will help build our confidence for growth in the Macy's brand going forward.
Okay. Thanks very much, guys. Appreciate it.
Thanks, Mike.
Thank you. Our next question is coming from Bob Drbul of BTIG. Please go ahead.
Hi. Good morning. I guess two questions from me. The first one is, can you outline a bit around the progress that you think you're making with younger consumers? I think you mentioned the prom event, but just sort of where you're really focused and what you're seeing, with that consumer segment. And I guess the second question I have is just around some of the newer brands that you're bringing in. Can you just detail a bit on full price selling and sort of what you're seeing, with the promotional environment versus, your ability to attain full price as you sort of work through the program? Thank you.
Sure. Thanks, Bob, for the question. Continuing to focus on 5 different generations that are shopping with us. We believe we have a tremendous opportunity with the next generations of customers. As you mentioned, we held a prom event in over 200 locations, had tremendous turnout, activating high schools across the country, continued to be a resource and destination for Sweet 16. As I mentioned, 25,000 people getting married registered at Bloomingdale's. 75% of them are in the Gen Z and Gen Alpha.
25,000 people registered at Bloomingdale's. They only got like 50 stores. That's pretty cool.
I guess more so Gen Z kind of population. But other categories like timepieces, fragrances tend to skew younger, and I think give us the opportunity to continue to grow with that cohort. We are a destination for first job, first home, marriage, and the moments in life that I think expose you to these multiple generations of consumers. The newer brands we're very pleased with, and I think the best indication of our full price sell-through and of our performance is the fact that the brands are expanding distribution with us and adding more stores. We believe in the breadth of good, better, best. We need to have the right mix of assortment in opening price point, as well as not undershoot the customer in terms of their interest in most wanted or sought after brands. So we want to have that breadth of Polo Ralph Lauren and Coach and Reese and Theory. Yes. And at the same time, we want to have the right, good, and better brands within our mix so that we can be a destination for customers that are looking for a variety of brands and price points.
And Bob, I'd add that we ended the year with inventories down and in a very good position with increased newness. And we have ample open to buy so we can chase into these trends should they occur, and also flexibility otherwise. So we're looking to maintain our...
Another guy asked about discounts, and yet again, they're like, look, we're not going to discount. If you want something that costs less, here's this other brand that costs less, and the quality's less too. But we're not going to sell you Coach for 30% off or whatever. At least not like systemically. And a promotion maybe.
Flexibility to in the past year, the beginning of this.
Wrap it up,
Retail
Tony.
Tracker, please go ahead.
Hey guys, congratulations. The stores look absolutely fantastic.
That's interesting. That's the second person that said that. That an analyst on the call that has gone to some of their reimagined stores and said, "Man, like this store looks great." That's that's unique.
Congratulations on that, especially very impressed with what I'm seeing at Macy's. Could you talk?
I mean, that's really unique. That's really unique for an analyst to be engaging with the brand to that level. Usually they're just engaging with the financials. But it sounds like people are like emotionally rooting for this company, which is huge.
A little bit about the customer coming into Macy's. Are you getting, I know Bloomingdale's, I think you've talked about it quite a bit, and you're seeing the generational shopping also. Are you seeing that at Macy's beyond, say, the prom event? Are you getting a younger customer back into the store? Is the online shopper a different shopper? Are you getting the younger customer in through online? And then I just have one quick follow-up on the beauty business. If you could just give us a quick update there about what's changing there or expected to change in 26.
Sure, Marnie. Thanks for the question. Both Macy's and Bloomingdale's have an opportunity with the younger consumer. I think it's both being a destination for all of these life moments that begin from bar mitzvahs, bat mitzvahs, confirmations, sweet 16s, and yes, the prom events and the first jobs and the weddings that happen, and that we are definitely driving those consumers along in some cases with their parents or sisters or siblings into the stores. And digital certainly is an opportunity for us to capture a younger consumer who's looking for a broad array of price points and brands. And Marketplace gives us the opportunity to lean into baby and into maternity and into other aspects of life that give us more exposure to the younger consumer. The prom event, just as an example, because I was in our stores at both Macy's and Bloomingdale's, there's just a tremendous amount of traffic in the stores. And it is all these young consumers. The activation of these high schools across the country was phenomenal. And I think it just underscores the interest that these local communities have in national retailers kind of stepping up and doing something distinctively different to make sure that we're obviously a part of their life's moments. What was your question on beauty?
I was just kind of curious. You guys have a stronghold in fragrance, obviously. There are a lot of new brands in beauty that are targeting a younger consumer. I see some of them filtering in, especially Bloomingdale's. Are you pushing the envelope on that? And just an update, on Bluemercury and any changes happening there.
Sure. We had growth again in the fourth quarter at Bluemercury. Finished the year with growth across the nameplate. We are continuing to see the strength of Bluemercury and dermatological skincare and brands that are not as available in more mainstream stores. Mm-hmm. And as it relates to Bloomingdale's and Macy's, we are absolutely leaning into newness, as well as partnering with the major brands on how we make the counter a greater destination, greater interest, how the beauty advisor with the free services offers her consultancy and helps people with their beauty regimen. Because we know we're seeing, back to young people, kids as young as 12, 13, 14, starting a skincare regimen, and the mother is looking for someone to help with that. So you're not just putting anything on your skin, you're trying to find actually what's going to work with your skin. And so we're proud of the breadth of the assortment that we carry, and that we continue to expand brands like Sicily and La Mer, and that we also introduce newness from Clarins, as well as play in the color space with brands like Victoria Beckham Beauty and others.
Fantastic. Thanks, guys. Best of luck for the next quarter.
Thanks, Marnie.
Thank you. At this time, I'd like to turn the floor back over to Mr. Spring for closing comments.
Thank you, everyone, for your thoughtful questions. We appreciate the interest in Macy's, Inc., and we look forward to updating you on our progress on the first quarter call. Have a great day and rest of the week. Take care.
The end, huh?
Ladies and gentlemen, thank you for your participation. This concludes today's event. You may disconnect your lines or log off the webcast at this time and enjoy the rest of your day.
Enjoy the rest of your day. Okay. It's quite the flash sale. Just slapping 50% off everything, you know? It's kind of crazy. Not much on the men's clothing though. That's crazy. They've got this huge flash sale, but it's all kids and moms. Very interesting. Anyways. Okay. Macy's as a company, like I mentioned a few takeaways throughout the call. To summarize slash as it relates to GameStop, are they more or less likely as an acquisition target? To me, it doesn't sound like I think less likely because it seems to me that they have a strategy that's actually working and they're seeing the returns on that strategy. I'm not sure from their leadership and from their investor base if they feel like a parachute is needed. You know, now could they still see that perhaps merging with GameStop could still create a conglomerate that together is more powerful than they would be as separate entities? I think that's totally possible, but it's it's uh it's interesting to hear leadership that feels like they're actually seeing growth already and investing in that growth compared to a target that's, you know, kind of kicking the can and doing more of the same and hoping that it moves the needle enough. Macy's, though, is such a, I mean, at a 9.9 PE, like Macy's as a company, it sure seems like it has stabilized. And with its smaller footprint in stores, it seems like they're able to get ahead of cost control. They don't sound super promotional on the way they're describing themselves. Like they seem pretty calculated. And at the same time, those calculations like have math attached to them. It's not just promises with air. And they're seeing their, they're not just the number one women's department store. They're also like in some ways the number one events store, right? With what they've learned through the Macy's Thanksgiving Day parade and also with their July 4th, apparently. I didn't even know they did July 4th, but in localizing that, they said they did 200 different prom events. Like these events that they do are actually pretty large in scale. And to tie that with celebration and to use all of that marketing spend as a way to sell full price rather than just having to attract people based on the discount where customers are just transactional, right? Like I want this shirt, who will sell it to me the cheapest? That's where a lot of people are competing, and that's not really where Macy's is looking to compete. Like it just seems like they have a lot of things going right in their turnaround. And even when you look at their stock, yeah, they're down 4.9% over the past 5 years. But, since 2023, they dipped back almost that low in 2025 as well. But they're up, 70% over the past 9 months, as this inversion has taken place. Maybe more like 50, 60%, 70% if you go to October 2023. So it seems like they've righted the ship. And as a result of that, I don't know if the management team is sleepy enough to be interested enough in selling. But if they were interested in selling, I mean, when you buy Macy's, you are buying three stores. When you buy Target, all you get is Target when you buy Kohl's, all you get is Kohl's really. When you get Macy's and Blue Mercury and Bloomingdale's, right? You have differentiated skincare slash beauty store, high end Nordstrom type store, and then a middle end, department slash clothing slash some kid stuff there too to keep the moms coming back. Um, Overall, and they're chipping away at their debt, right? Their debt expense. Do they need cash? Yes, but they need cash less and less each quarter because they're printing they're printing and they're returning that cash via dividend, and they're returning that cash via stock buybacks, and they're returning that cash via debt payoff on top of just of course meeting their interest payments as well. So it's an interesting, like, it's an attractive value for the brand backed with the balance sheet. And if sales per store have stabilized and simultaneously you're talking about $1 billion in operating profit, operating income, and 600 million or so of net income, they have the free cash flow to do what they need to do, right? Like $1 billion in operating income, and yeah, they're paying a pretty high tax rate, but that's normal. Um, 650 net income, like if sales per store have stabilized, they can get rid of the stores that they need to, and that's what they're doing. So it's just one of those companies. I'm like, okay, if GameStop bought this, what do they do for Macy's? Like, what do they do with Macy's? What does Cohen's leadership change about how Macy's is operating? I think Macy's is doing too much. Like they're doing too well. And the way Macy's is doing it is honestly what GameStop hasn't done. At least hasn't done yet. GameStop started with 5,000 stores. So they've been trying to get to a Macy's like footprint to where then they can begin reinvestment. But Macy's has such a small footprint that again they're reinvesting in their stores, which GameStop hasn't done. They're paying a dividend, which GameStop hasn't done. They're doing share buybacks, which GameStop hasn't done. Right? And they're spending on marketing to drive customers, which GameStop hasn't done. So all of that said, they are also cutting costs as far as store closures. They're also keeping SG&A low and declining year over year. So it just doesn't seem like something that Cohen would be able to come in and say, "Oh my gosh, there's these huge inefficiencies, and actually you'd be so much better off if you did X, Y, or Z," compared to, you guessed it, a Target. Compared to a Target. So overall, I think the mom and kid um, demographic is one that's attractive for Cohen, but I think he would want to see an even more inefficient business, which Target is from a revenue, I mean, from a profitability perspective, they're honestly probably pretty similar, but Target netting 5 billion of 105, how much is zero point 0.6 divided by 22? Yeah, Target's like net margins are actually higher than Macy's net margins, but part of that is because Macy's is actually growing still as well. All that to say, either one has inefficiencies, that's for sure. But it just seems like Macy's leadership is very prudent and on top of it and calculated, whereas Target's leadership sounded very promotional and full of promises, but um, not necessarily clarity on how much exactly is this going to cost. I don't know. It's probably going to end up being neither of them, and it's probably going to end up being Caesars, and it's going to make me cry. Um, But I think I think as a company, Macy's is they're doing the right things. They're doing the right things. And if you can survive the retail apocalypse and 5 years later, you're still doing 1 billion in operating income and 800 million in free cash flow, and you're still trading at a really deep low PE ratio below your book value, it's a really exciting value play. Would GameStop be interested? I think they would be. Would Macy's be interested? I don't know. That's the only thing. They just seem like I think they're big enough. I just don't know if they're sleepy enough. I don't know if the management is sleepy enough. So those are my thoughts. Let me know in the comments if you think anything differently. Did you uh did you like listening through the earnings call together, seeing my live thoughts and reactions? Or was that miserable? If you made it to the end of the video, hopefully it wasn't miserable, because why would you do that to yourself for this long? But yeah, give me your feedback in the comments. Would appreciate it. Um, but that's all I got on Macy's. I think attractiveness as a company, up. Very nice trajectory, very nice profitability, and very calculated and under promising management that has some key categories of growth, such as their other brands, and has some key, like areas of expertise through their events that's enabling them to connect with customers at a deep level and ultimately drive up the value of what they're able to sell rather than having to discount everything. And their smaller store footprint and well placed stores in terms of the real estate value of the stores that they own and or lease, like the where they do business and how they do business. It's just it's a pretty solid business. Pretty solid. It's hard to imagine like what happens that puts Macy's under, particularly when you think about a Kohl's and a Dillard's and these other retailers that aren't quite as loved by America, right? You could hear the love for Macy's just on the earnings call. It's like as the brick and mortar pie gets smaller and you see bankruptcies and consolidation, right? How much of that does Macy's benefit from, particularly when they're also partnering exclusively with the Toys R Us brand, which is another loved American brand like this, it's exciting company. Likelihood of acquisition, I think a little bit lower, which to me, honestly, is pretty exciting because it also means that the likelihood of a target acquisition to me feels a little bit higher. Like I might make it more like 10% here, 65% here, like give me even higher chance that it's target now based on what we learned in the Macy's call. But if you're interested in Macy's as a flyer for an acquisition target and or for a value investment, I think it's relatively good value, relatively easy to justify from what we heard together. All right, I gotta go. Let me know what you think. Appreciate you for being here. I'll see you in the next one.